All right, welcome everyone. Welcome to this episode of Market Wrap. I have with me Mr. Pankaj Pandey, and markets have seemed to come back with a vengeance. Sir, we saw 5 straight months, a red candle, and then what a good green candle we have seen. Uh, Now that we are at 23,600 to 800 levels, markets seem to have been somewhat consolidating. What is the outlook from here on? Do you think we'll go further up from here, or there's a dip possible again?
Hi, good evening, Vishu. See, overall, like you highlighted, yes, Indian markets have reversed their 5 month of corrective phase. And this corrective phase was one of the longest we have seen in the past 3 decades. Now, what we are clearly seeing is a shift in approach. So earlier, in the previous 5 months, it was more of a sell on rally approach, but now that approach has shifted towards buy on the dips, largely because the sentiments have improved. Overall sense is that you will see softer tariffs, and we've seen big sectors like say bank is at a 2 month high. Similarly, defense stocks have made a good amount of comeback, and then PSUs also have been sort of doing well. So our sense is that see, this week has been a bit volatile. Probably next week also is going to be equally the same, largely because it's a sort of a truncated week. And on top of it, so April 2nd is what when people will watch for the impact of reciprocal tariff as and when they come by. Since we have already seen a 1500 point kind of a rally, so overall sense is that possibly supports are placed at about 23,000 kind of a levels. But what it does is that since the approach of the market has changed, so which is where we feel that 24,200 could be very much possible in the coming weeks. And it's not only for the index. When you look at the broader markets, also out of the universe of NSE 500, more than 50% of the stocks are trading above their 50-day simple moving average. So clearly, it's a very broad-based move what we are seeing. And like I said, a big sector like banking has been sort of doing well. They've been able to surpass 2 months high. So from that perspective, yes, there is definitely a change in approach for the markets overall and for the better.
Absolutely. And so, could we delve a little into the behavior of FIs? How have they behaved in this green period?
So I think we should last 5 days we have seen inflows of nearly close to 30,000 odd crores. So while we have been highlighting all along the inflows and in the equity market, what I would want to also highlight is the kind of flows we have started to sort of get in debt. Just to give a number, for example, in the month of December, January, February, on an average, we used to get about 12 to 13,000 odd crores of inflows in these particular months in the debt market. But when you look at in the month of March till 24th, we've already seen twice of that in terms of inflows in the debt side. So about 27,000 crore kind of a number we have already got. And what it has done is that in the last 1 week, we have seen that the 10-year yield has sort of drifted lower to 6.63%. And I think this augurs very well from the perspective that the domestic liquidity will sort of ease a bit. Then there is a good possibility of RBI cutting rates by at least 25 bips in the next policy. And obviously, that will sort of get passed on. So, in general, the overall sentiment of the FIs is improving not only on the equity side, but also on the debt side.
Right. So there was also a 25% tariff imposed on Indian exports to US. How do you see this playing out?
So I think Donald Trump has proposed 25% tariff on imports of car and components in the US from whichever country, including us. So what they're clearly highlighting is that 25% tariff will be levied on passenger cars or LCV components imported into the US. And this is going to take effect from April 2nd. And it will apply to both finished vehicles as well as the imported parts as well. Now, from an OEM perspective, we really do not do exports to US. I think the only segment or the only company which is going to get impacted is Tata Motors because Tata Motors, North America is a big market, which is largely US. One third of their volume goes into that region. and that is the company which is going to get impacted. So obviously it is sentimentally negative for Tata Motors. But our sense is that EU or UK particularly has been a good partner for US in number of areas. So our sense is that over a period of time, we would not expect this high tariff of 25% to be levied. Possibly, you might see a softer tariff there. So it is not going to be very negative for Tata Motors. But yes, for the next 3 to 6 months, uh, Tata Motors definitely lacks a trigger, largely because, see, US was the only market which was doing well for JLR. China and Europe are not doing so great. Domestically, CV is still in a sort of a soft patch. So from that perspective, Tata Motors may not really do much in terms of price performance. The segment which is going to get impacted is auto ancillary. So auto ancillary, 27% of the export goes into US, and that is where the segment will get impacted. So still we need to see, but for India, relatively the impact is far more lesser.
Absolutely. So there was also another news around commercial vehicles that their safety norms have been upgraded. What impact do you see here?
So yes, government has been taking measures from time to time to sort of improve the safety parameters for the entire auto industry. Now, this time around, the government has come up with a plan to sort of upgrade the commercial vehicles, and therefore it has proposed that new passenger vehicles which carry more than 8 individuals, buses plus trucks, I think all of them will need to be fitted with advanced emergency braking system, driver drowsiness or attention warning systems. Now, this is again a step towards making Indian roads a lot more safer. But from a company perspective, there is one company which I would want to sort of highlight, which is ZF Commercial Vehicles. So this company is one of the few auto ancillary companies which commands a very high margin of about 18 odd percent, largely because of the technology prowess it carries. This company has already started supplying ADAS to a lot of these domestic customers. And this is one of the few companies which is saying that the existing content per vehicle will go up from say $600 to about $1,000. So it's a very niche kind of a stock, and the only or the major beneficiary of this move, and which is why we feel that this stock is good even from a portfolio perspective. We cover this stock with a target price of 16,300. Valuations have always been rich, but you hardly find a auto ancillary which commands high teen kind of a margins.
Right, sir. So there was also news around Maruti Suzuki. Their board has approved yet another manufacturing line. How do you see this playing out?
So Vishu, see, this is overall part of the big plan which Maruti had announced that they wanted to take their capacity from say 24 lakh to about 40 lakh by 2031. So what they have done is that they have already commissioned a 2.5 lakh unit in Kharkhoda in Haryana, and another one is what they have already sort of working on. So basically, they'll have three manufacturing plants in that, and overall capacity will be 7.5 lakh. Reason we have started to sort of like Maruti is again because of the consumption boost which we are expecting because of the relaxation in the personal income tax which which is expected to kick in. So overall, Maruti is expected to sort of benefit from this. And nothing new from a plan perspective because this is already part of their mega plan.
Right, sir. Besides automobile, I think defense is another sector which has been in the limelight a lot. There have been a number of orders coming in and a number of items of news, other news. How do you see this playing out for defense?
Oh yes, Vishu. So to give you some perspective, last year the ordering was about 1.08 lakh crores. This year, up till now, we have already seen contracts worth 1.5 lakh crore given. So, and our sense is that with the defense secretary clearly highlighting that this year the ordering could be even more higher. So, our sense is that the government has started to sort of act on this. Now, coming to the engine specific, now engine was one of the key concerns because of which HL was not able to deliver the Tejas aircraft. Now, with the beginning of the delivery of the engines, HL will be able to produce 12 aircraft in FY26 and 24 subsequent onwards. And so HL is already sitting on a pretty healthy order book of about 1.33 lakh crores, and which is nearly 4 times of their overall sales. Now, this is not the end of it, because once the delivery of the engines is started, our sense is that the company could be getting 94 additional Tejas Mark 1 aircraft order, which could have the potential size of about 60,000 odd crores. And on top of it, they could be getting about 156 light combat helicopters, which again would be the tune of about 50,000 odd crores. So HL is definitely going to be there in the limelight. We like the stock. Target price is about 4,800. Now, besides this, we have already seen Bharat Electronics receiving orders of nearly 7,500 crores in the last 2 months. BDL again got an order of about 73 odd 100 odd crores from January onwards. Now, overall sense is that the ordering has sort of picked up, and like I said, this is going to get better. So I think the action has started on the defense counters, and we would want to believe that things will keep getting better for the entire pack.
Right. So another big highlight this week was RBI relaxing the PSL norms a bit. What do you see the impact here?
So Vishu, while RBI has rolled out the revised priority sector lending guidelines, we don't see this as a major positive. But we need to sort of understand this, that these are incremental positive steps the RBI is sort of undertaking when the new governor has come on board. And so it becomes a lot more positive from that perspective. A lot of series of steps are being taken to address the challenges faced by the banking industry. So from that perspective, I think it becomes a big positive. So what they have done is that they have increased the limit for home loans at 50 lakh. So that is for a population over about 50 lakhs. Then I think the limits have been increased from 35 to 40 lakh, or 25 to 35 lakh, depending on the population catchment area. In addition to that, what they are also done is that the loan limit for renewable projects have been increased from 30 to 35. And then they have introduced a new sub-limit of 14% for non-corporate farmers within the overall 18% agri limit. Now, the point I'm trying to highlight is that the RBI is taking number of measures to improve the performance of the sector, and it's a big sector. And we have already seen Bank Nifty at a 2-month high level. And I think with these kind of announcements keep coming in, overall sense is that banking sector will start to sort of perform more constructively, and we are already seeing that in Nifty. Again, from a stock perspective, minor positive, but we take this as a series of positive measures being taken by RBI. Lastly, I think the stocks which we would prefer is Kotak Bank, Axis Bank, and HDFC Bank.
Absolutely. Sir, we also saw Japan seems to have implemented a new anti-dumping duty on China on graphite electrode imports. How do you see this playing out?
So what we have seen, Vishu, is that the graphite manufacturers, so we have only two graphite manufacturers. One is the Graphite India and the other one is HEG. So both these companies did very well in terms of price performance and are largely driven by the news which you highlighted. So what Japan has done is that they put a 95.2% kind of a dumping duty on graphite electrodes from China. And typically, Japan consumes about 60,000 odd tons, so and China supplies about 15 or 1/4 of that demand. And so while we don't think that it is going to be a big positive, because the challenge with Japanese players is that their production is already at a 5-year low. So we don't see a big incremental positive. What has also happened parallelly is that the Chinese manufacturers have increased the prices of high power graphite electrodes by 7 odd percent. Now, this is definitely positive for a company like HEG because 1/3 of their revenue come from this segment. So which is why I feel that overall things are sort of shaping up positive. So why we like this graphite electrode companies is that globally, next 4 5 years, our sense is that you'll see 170 million ton kind of a electric arc furnace is expected to sort of come up. and that would require about 2 lakh tons of graphite electrodes. And there is no capacity coming up there. So from that perspective, we feel that somewhere down the line, a lot of these events is definitely going to be a big positive for all these players. What we like is HEG more at the current levels.
Right. So talking about hospitals as a sector for a bit, I think Q3 was not very pleasing for hospitals. How do you see the sector from here onwards?
Oh, yes. So hospitals, if you look at Q3 is a sort of a seasonally softer quarter because it's a festive quarter. Number of elective surgeries are lesser. When we sort of do the numbers for the hospitals, what we cover, so top 5 hospitals, what we cover, their revenues have degrown by about 4 odd percent on a quarter-on-quarter basis, a bit about 9% degrowth. But I think people should not take this as a weakness because on a YY basis, they're still sort of growing. Now, Q4 happens to be a far more better quarter. We've already seen companies like NH making new highs. Now, what happens is that overall, besides a stronger Q4, things have also been structurally improving. So, for example, private insurance coverage, covered patients have gone up to 40% from 15% in the last 3-4 years. Similarly, case mix is better. Earlier, critical surgeries like organ transplant or cardiovascular surgeries, uh, so their proportion has grown up from say 10% to 15 odd percent. And whatever hospitals have been opened in the last 5-7 years, they have become profitable. So ROCs of most of the hospitals have been inching upwards. On top of it, they are expanding their capacity by 40 odd percent. I think recent quarter weakness should not be taken as a trend. Our sense is that overall hospital as a space is a far more better structural theme to sort of to look at. Besides hotels and hospitals, I think these are the two themes which look structurally very positive to us. What we like in hospitals is something like Narayan Hrudayalaya, which is already doing very well. Then HCG is also somewhere down the line I had highlighted earlier, and beside that, Apollo Hospitals.
Right. Answer. Summers are just here. How does and this is probably a question that pretty much every investor thinks. Let's invest in AC stocks. Let's invest in fit stocks. How does this sector look actually?
So I think things are getting a lot better for the sector. See, from a demand perspective, about 1 crore units were sold in FY24. This year, overall growth expected is about 25%. And Q4, the growth is expected to be even more than 30 odd percent. Now, good part is that the overall penetration of ACs is only 7 to 8 odd percent. So there is a far more room to sort of grow. And our sense is that not only this year, even next year also, you could be expecting a similar 25-30% kind of a growth. So within consumer durable, this is one segment which can keep on growing on a sustained basis. Now, there's some challenges the companies have been facing because of the BIS certification have lapsed for a lot of Chinese compressor products. And as a result of that, and also because of the fact that since US was about to levy tariffs, so a lot of Chinese exports have gone to US. And but our sense is that while the industry could witness some component shortage, especially compressor, that is where the government is probably going to work in terms of doing more of a localization of that particular product. But in the interim, since some of the product prices or input prices have gone up, so AC manufacturers have taken a price hike of 3 to 4 odd percent. Now, overall sense is that this is one category, like I said, which can keep on doing very well because what we have seen, clearly seeing is the temperature levels have been sort of rising, and that is going to definitely drive the demand. Now, this segment can be played through a number of ways. So you have companies like, say, Voltas, which has got a market share of about 20.5%, or Blue Star, which has got a market share of about 14 odd percent. Or one can look at even contract manufacturers like, say, Ember Enterprises. But I think AC manufacturers are definitely having a good time, and I think this time is or good times are expected to last for a few more years.
Absolutely. Well, that was it this time. Thank you so much, Pankaj sir, for sharing your insights. We'll be back next week, same time. Thank you so much for watching, everyone. If you have any questions, please put them down in the comments. Thanks again.
Thank you so much.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.